Okay, welcome everybody to another Pepperstone Learn It Live webinar for Forex scalping strategies for part-time traders. And I tell you what, it's always an exciting webinar when we get to cover scalping strategies, Tyrone. How have you been this week? And how does, I don't even know, is it week 3 of lockdown going for you?
I think it is week 3 of lockdown. Scalping strategies are everybody's favorites, and at the moment, in the current market environment, nothing is better than scalping. So really looking forward to getting into our favorite scalping methods, and we're going to jump into the live charts tonight as well, so everyone will get a chance to see what is potentially setting up and exactly what we're looking for. So, you know, we're very aware a lot of people are at home at the moment, and it's a really, really good time to get involved in some good quality scalping methods to really learn and set yourself up to do it part-time. So we'll jump straight in.
Now, I will warn everyone, we will be going fast tonight. We do assume some level of, obviously, knowledge of the trading markets. That's because we're going to cover a lot of content. And yes, this will be recorded and uploaded to the Pepperstone YouTube channel, so you can watch it at your leisure to pick it all apart and make sure you get as much as you can out of this webinar, because it's going to be great. So what we're going to be covering today is scalping setups on smaller timeframes, how economic news can impact currency pairs, especially during the month of April. You need to be careful. We repeat it, this month is going to be very, very explosive. Specific patterns and price action setups to keep an eye on. Not always heavily utilized by scalpers, incredibly important though, and we'll talk about that. And of course, live Q&A with our team. So get those questions coming through, and if you want to have them answered, we'll try to answer them during the webinar and at the end. We've got usually 5 minutes spare to answer as many as we can.
We are going to do as many questions as possible. We have got an extraordinarily large group tonight, so just be patient with us and we'll do our best to get to as many of them as possible.
A few people that are foreigners, I believe this may be picked up in translation subtitles, so you might be able to get access to that. So just before we get started, the risk warning is, of course, all the information contained in tonight's webinar is of a generic nature and for educational purposes only. The information does not take into account your personal objectives, financial situation, or needs. So, of course, it is not constructed as an offer, recommendation, or solicitation to buy or anything like that. So, just to make sure everyone knows it is general in nature. So Pepperstone's doing some great stuff at the moment. Here's some links for all the things. Look, definitely there's been a huge boost in the amount of traders out there. Pepperstone is moving forward with all the social medias. Everything's got a unique twist on it, particularly Instagram. If you follow them there's a daily setup. We love Telegram. Tyrone, if you want to put in the Telegram links for everybody, there's 2 public groups. There's FX Evolution's public trade chat, where you can obviously share your trading ideas and concepts and technical analysis. It's a great community. It's getting bigger every day, so we encourage you to do that. And of course, Pepperstone's amazing Telegram, where you can see the daily kind of 5 top things that have happened. I've noticed they've started putting through information on the weekend as well. So like that OPEC summit that was meant to happen that got cancelled, all that news is there. So you can get it very quickly, very easy. Get on Telegram, it's amazing. And of course, there's Chris Weston's daily fixes and all sorts of information coming out all the time. So Chris does some amazing fundamental work for traders in Pepperstone. Now we talk about this slide a little bit. Important to know what the volatility index is. Here's some information, but in essence, it's the volatility index. When it's higher and the number's bigger, the scalping is on, as in the moves are going to be larger. We recommend, I guess, as a thing to look at for the VIX is when the VIX is above 25 in terms of number, you really want to be moving your trading to day trading and scalping concepts. And this is because it's just going to be so volatile. You'll need market adaptive trails and things to help you lock in potential profits, such as larger moving averages and behind the last swings, et cetera, et cetera. And we'll talk about those more tonight. But if the VIX is above 25, move to your day trading and scalping strategies. Ty, in terms of market conditions, I think it's a must that people know whether a market is trending or it is range bound. There is range-bound markets even during volatile times, okay? So make sure you learn patterns such as channels, double tops, and double bottoms. They're very important for you to understand when the market is basically in a range and when you should potentially be looking more at shorter take profits in terms of your scalps. So we want to choose our time frames. Of course, scalping is generally 1 minute, 5 minute, 15 minute, 30 minutes. We like 5 minute, 15, 30, 1 hour. There is reason for that. If you scalp a 1 minute chart at the moment or a 3 minute chart, unfortunately, even the smallest bit of news could potentially stop or gap your position, okay? April's going to have so much news, and even what we call basic, not generally market moving news is going to move the market, Tyrone. So, I mean, you'd agree that we traded the GFC, there were extreme moves. So we must let everybody know, I believe that April, any bit of news coming out of Europe, any bit of news coming out of the US, even if it's just not considered amazing big impact news, is going to be high impact. What are your thoughts?
Yeah, definitely. And it's going to look, it provides an awesome trading environment, but it is still very important to understand what the dynamics of the different timeframes are doing, because it's going to give you the best chance to scalp, obviously in the direction of the prevailing trend. But during these periods, the prevailing trend is obviously a lot shorter. So we need to be looking at the timeframes that are very, very relevant to what you're trying to trade. So that's what we're going to talk about tonight, because there's no point trading, a daily prevailing trend on a 5-minute chart. Obviously, there are more timeframes that are going to be better for you to understand the direction. So we'll go through that. But probably one of the most important things that we follow, especially in scalping strategies, are the moving averages that are going to help you in short-term scalps, namely the 20 moving average and the 50 moving average. Now, we use EMAs, so that's exponential moving average, because they're a little bit faster than the simple moving average, which traditionally the SMA a lot of people do use. In a scalping market, you definitely want to be active, and you want to see all the things move as fast as possible. Yes, it can give you the downfall of an EMA can be that it gives you potentially some false signals, but when we're looking for scalps, we take that chance because it does often get you into the market a lot quicker than a simple moving average will.
Absolutely, yeah. Look, the thing with scalping, and I think this US dollar yen is one of the best examples of this, Ty, when it comes to moving averages, is what you want to be doing, and this is contrary to a lot of scalpers' belief, is you actually want to find patterns on the larger time frames. And Tyrone, if you could pass everybody the free pattern technical analysis sheet we provide, it basically during this time, there's going to be about 10 patterns that you want to know. And you really don't even need to know any other patterns. You just want to know those 10 patterns. So we do provide a free technical analysis sheet for everybody to check that out. But this up here, Ty, on the 4 hour, and I know this isn't a scalping time frame generally, but this is what we call an ascending triangle. So contrary or general theory is that ascending triangle will go around this distance. All right. Now, if it breaks up, that is what it's meant to be saying. But a lot of people don't realize that if a ascending triangle breaks to the downside, it's just as explosive to the other side as well. And we can see that's what happened here on the US dollar yen. So if you're a part-time trader or somebody that's working a decent amount or even working during the day, this setup takes a little while to happen. It's a 4-hour chart, takes a little while to happen. You can actually set alerts for both sides once a day. And if those mobile alerts get triggered, you can then get into those charts, put in the half an hour that's needed, and get some amazing scalps involved. So as Tyrone mentioned, we have some great moving averages there, the 20 and the 50. Now, I didn't do this, but I need to put that vertical line in. So let me just pop that in. Perfect. All right, put that vertical line in, and then we'll go across to that. Okay. And what we'll see is when it breaks through, basically the market is explosive to the downside because that's what's happening. This has broken through this massive technical for a reason. It's had a go at trying to get through the highs and the resistance, but it's failed to do so. When it breaks to the downside, notice how the 20 moving average holds price in, and it continues to do so, hits the 50, and then it starts flattening off down here. So what you can do as a scalper is you can do so many things here. You can basically say, once we've seen the 20 moving average hold the price twice, every time it comes back to that 20 moving average, we can look for reasons to potentially scalp short this. And we can also trace or have a market adaptive stop. Maybe that's the 50 moving average, where when we short it, we can basically just follow price by the 50 moving average. And the 20 and the 50 will hold most prices. So when you notice an aggressive trend and it's breaking out of a bigger pattern, the 20 and the 50 can be that simple right now. See the bigger pattern break, get involved on maybe this, which is what they call an engulfing candle off a 20 moving average. So we've got a candle being engulfed by another candle, a great reversal strategy concept. And then of course, it just starts shorting through. we trail our stop loss by the 50, and then guess what? We get stopped out down here. And because the moves are so aggressive right now, Ty, this is definitely a valid kind of concept that happens time and time again. Here we've got yesterday. Yeah, here we've got yesterday, we've got a nice breakout of the US 500. So this is an index. We can see here the 20 and the 50 moving averages. And this time what's happening is it's respecting the 50. But what we had here on the 50 is we've got a hammer candle. If you're seeing these market adaptive, especially the 20 and the 50, even on the 15-minute chart, have key reversal signals around them, engulfing candle, hammer, they're very good signs, engulfing candle. All of these present scalping opportunities, and you can stay in the trade. Now, because you recognize that it came to the 50 won't be your market adaptive stop loss here. What you'll end up doing is you'll put one behind that'll be slightly higher, let's call it a 70 or something, and that most likely will hold you into up here. So that's how you stay in a trade for longer. Imagine if you got in here in a scalp and you held the trade all the way theoretically to this double top up here, where you've got a high, and intervening trough. That's a huge amount of points and a very explosive move that's over in only, realistically about 5-6 hours. So very, very fast moves, and that is your key. So whenever you see a breakout of, let's say, multiple resistances, or what we're going to call the 1, 2, 3 method later, looking for reversals such as hammers, such as engulfing candles, and having realistic take profits is going to be very, very key. So moving averages, definitely something you should add in, 20 and 50. We reiterate that quite a few times.
Yeah. A lot of you who are probably joining us for the first time are probably thinking, well, it might be okay, for now, and this looks like it's really good at the moment. But for those of you who have been with us for the years that we've been doing this, you will know that we talk about the 20 moving average all the time. Now, even in as a scalping opportunity, it's absolutely awesome. But believe me, we can promise you that you can go back through any charts that you like on any instrument that you like, and you will see the very same thing happen over and over again. It is a tried and true strategy that has been working for many, many years. Many traders just follow it and follow it only. We talk about it literally every single week at our live market analysis webinars on Wednesday nights as well. So yeah, it's not just happening now because the market is volatile. It happens all the time. So please give a lot of attention to the 20 and the 50 because they are fantastic moving averages.
This is the kind of breakout that you're looking for as well. You're looking for a level where maybe the market has found support or found resistance, and then when it breaks through, and we'll call it the 1, 2, 3 method later, you'll see this gives us the opportunity to know, okay, this was a super key point. The market has found so much support at this zone. When it breaks through, the 20 becomes very real, or whichever one it gravitates through first. So we can see the 20 held at the first time off the break, held at the second time. It kind of becomes a self-fulfilling prophecy. Even down here, when price was flattening, which it eventually will do, the 20 was only broken here, and then of course it was over at that point. But we saw that that was also a huge base that was formed, so it lets us know the trend is weakening. So make sure you put the 20 on there, no matter what you take out of today. Very essential to do that. Okay, so one thing in terms of price action, moving averages and indicators are great, Ty, but there's no substitute for being able to understand peaks and troughs in the market and understanding how to read price action. We do offer this in our courses. We'll be talking a little bit about those a little bit later, but realistically, the points, what you want to do is you want to have a points-based system for your technical trading. It's very important to have like a business plan, and you need to understand peaks and troughs, because when you understand peaks and troughs and how to read trend, you'll start to understand what we call role reversal and key support resistance zones. And when you bring that together with moving averages, MACD indicator, other things that we're going to talk about, all of those things together make a massive difference to you trading the correct areas and therefore having a higher statistical chance. So make sure you learn things about peaks and troughs, even if you're just following some stuff on the internet. Very important to do so. You need to realize how to do that. So Ty, MACD, moving average, convergence, divergence, I guess like the indicator itself, it's an incredibly popular indicator. A lot of people use this. A lot of people use stochastic. They use RSI. They use all sorts of things. But actually, we find that the MACD is probably one of the best indicators, and that's just because it's so widely used. If you look at things like Goldman Sachs and JP Morgan, and we talk Bank of America, it doesn't matter who it is, all these investment houses and banks, they do use the MACD indicator. They specifically use it on things like the daily time frame, but it's also built into so many robots and algorithms. And as we know, on the scalping timeframes, what you actually want to do is, if a key level of support or resistance is broken, you want to be with those algorithms and those scalping robots, because they're the ones that are pumping tons of money and tons of orders into the market, and they're the ones that push that explosive move. So having this one in your trading arsenal is really important. So Ty, you love MACD. What are your thoughts about that?
Yeah, MACD is one of the ones that we do love because it works in basically every environment. It can work in a trending market, it can work in a scalping market when the market's going sideways, whether it's volatile or not. Now, I mean, look, we can go through the slide. You can have a read of this in the replay if you want to work out exactly how to calculate the MACD. But essentially, what the MACD indicator is telling us and what it's measuring, the histogram of the MACD is basically measuring the difference between the 12 and the 26 EMAs on a chart. Now, why this is important is because when the histogram is getting bigger, it means that the 12 EMA is actually getting further and further apart from the 26 EMA. And that's telling us that the market momentum or market speed is increasing quite quickly, okay? When the histogram starts to drop and it starts to fall closer to the zero line, it means that the speedy 12 moving average is actually getting closer to the 26. So the market is actually starting to lose its speed and momentum. Now, what that's doing is giving us the ability to have an understanding of why or what the market is actually doing. So it gives us either a chance to potentially get in on the reverse side of that trade or potentially exit a long trade. So by that, I mean, if you are long and you're trading, say, the 20 moving average every time it touches it, when you start to see the histogram drop on the MACD, you're going to be aware ahead of time that the 12 EMA is starting to slow and it's getting closer to the 26, which means that the speed and momentum is starting to leave the market. So you're going to be really, really vigilant to actually exit the trade that we're basically talking about. We'll go to an example. So you can basically, we can see here, this is the, I'll go on to the signal line as well. The histogram is obviously the blue lines that you can see on the chart. So any of the MT4 or MT5 MACDs look like this as a standard. Okay, now all of these letters are representing every time the signal line, which is a 9 moving average of the histogram, exits or enters the histogram. Okay, now the most basic of MACD rules to follow if you want to trade a very basic MACD system, and it does work in scalping markets as well as it does in the trending markets, is when the signal line enters the histogram like it has here at A, you go basically long. And at B, you can see that it's actually entered the histogram to go long, okay? And this is when the histogram is above zero. So when the histogram is above zero, it means that the 12 moving average is above the 26 moving average. And when the histogram is below the zero line, it means that the 12 moving average is below the 26 moving average. So obviously in a downtrend or in an uptrend when it's above the zero. So basically, it works the same way. So you can see here in F where we've got the red highlighted dot. When the signal line exits the histogram, which is the opposite of what we're doing on the flip side, that's when you go long. Okay, so a very, very basic strategy. It does work. We don't use it in isolation because, I mean, obviously, like we said earlier, price action is the most important thing, and price action and role reversal areas where support and resistance is found will give you far greater, entry and exit points. But if you are looking for a very easy method to trade and you are limited on time, this one does work very, very effectively, especially on a scalp.
Okay, so we've actually got an example where we can bring it all together, Ty. And I know for a lot of people out there, we've got a lot of people saying we're going pretty fast on some stuff. Remember, you can revise this after. So here we've got the pound US dollar, and this obviously is something that's happened fairly recently, but it's just such an easy concept to see it happen time and time again. So here we've got a key level of support, okay? It's touched it multiple times. We're on a 4-hour chart. Again, we're going to be getting into the scalping, but that is a key level, all right, Ty? So what we don't want to do in this kind of market is predict any level is going to hold or anything in particular is going to happen. What we do see though, is we see that there's a nice bullish momentum candle here, little hammer here, where it's closed And this gives us the opportunity as a part-time trader or somebody that may not be always looking at it. You might have already assessed this as being a key level based on waking up in the morning, having a look at it, seeing the support here and putting that as your key zone, okay? When you see that 4-hour close, you can actually pretty much put a vertical on it, and then we can go down to the 15-minute time frame and we can look for a MACD signal. Is there any MACD signal? So here's where the reversal's happening. We can see here that on the close, we've got that signal happening, Ty, the buy signal for the MACD. So what we like to do is we like to bring a few things together here. We like to say, okay, we've got our trough, we've got our peak, we've got our higher trough, and we've got our higher peak as the price breaks through here. And that's the most important part. That's the price action. At the same time that's happening on the 4-hour, we have that little hammer candle. So we've got the 4-hour agreeing with us. We've got a peak, a trough, a peak, a higher trough, and then a break to a higher peak. When that happens at the same time, this signal line MACD is agreeing with us. So we have, and price has broken through the 20 moving average and it is above that. So when all of these things happen, we can basically get into the trade and we can say, okay, we want to buy the trade at this point. We're going to get into the trade. We're going to get in on this close candle. So let me just get rid of those highlights. This is going to be our candle of buying opportunity. And in terms of where the scalp should go, we're pretty much going to say, okay, well, this is a scalp. So it makes sense for it to go back into the previous resistances. And that's a lot of pips, Ty. For a lot of scalpers, that's a lot of pips. The beauty of it, though, is there's so many things coming together. We've got the buy opportunity, the stop just has to be below the last swing. So we've got the opportunity to get in here. We're getting in, we're putting our buy in. Let's say we wait for the confirmation, which we should do. We've got in this case a 38-point, stop loss. It's pretty big for a scalp, but this market was moving incredibly violently. So 38 points. We've got a 65-point take profit. Makes sense from risk reward standpoint, and you're basically buying it and placing a take profit up here and leaving it. You don't actually have to do anything else. Once you've made that decision and you've done your analysis on everything, so you've bought across your signal line, you've bought across your larger time frame analysis and your peaks and troughs in terms of higher peaks and higher troughs and change of trend on that time frame, you can basically buy this, place take profit here, put your stop loss in, and maybe at 65% towards your take profit, you might say, okay, I'm going to break even the trade. And other than that, you don't have to do anything. It's that simple. So that's the beauty of trading. When you correctly identify areas like this key level support and you go to that larger time frame, bring it down, you can scalp an amazing opportunity, get a 2-to-1 kind of risk reward. And it's just great, isn't it, Ty?
Yeah, it's fantastic. So just quickly, I'm just going to feel like we've got a lot of questions coming through for us to check out individual pairs, where we're going to try and cover as many as we can in the learning process in this one. But if you want to do and follow us for live market analysis, we've got a webinar that starts just straight after this one, really at 9 o'clock. So in 35 minutes time, I'll pop the link in the chat window. So it's free to join. That's where we do the market analysis and we can check out all of the requests that are coming through. So feel free to log into that one, register for that one, and we can discuss a lot of the questions that we're getting about the current markets, because we do live analysis in that particular webinar. And also, for those who missed it earlier, this is definitely being recorded and it will be on the Pepperstone YouTube channel tomorrow morning. So for anybody who's having any sound issues or if they're having internet connection problems, it will be recorded and it will be available for everybody to watch tomorrow on the Pepperstone YouTube channel.
So Tyron, let's go back to this Euro US dollar 1 hour. And I just want to again reiterate, the key is the larger time frame first, then the smallest time frame for the entrance and the scalp opportunity. So here we've got the Euro US dollar 1 hour, and we can see that it was ranging within a zone and then it's broken out and then it's come back and it's basically done what we call role reversal. So that's where resistance becomes support and it hits that key zone and bounces off it. Now, as soon as we have alerted ourselves to this key area and it's bounced off it, that's when we can say, okay, we've got our alert, because let's say we were alerted to this zone. We can jump into the 15-minute chart and we can say, well, what are we seeing here? So at the point that we might jump in, we're going, okay, well, MACD is currently the signal line's kind of in the middle, and then you can see MACD starts to rise and it breaks out. At the same point as it breaks out, we get, lo and behold, a nice little bullish hammer. We also get a new peak just after that. and you can see here prices around this zone. So what it enables us to do is it enables us to basically recognize an area. Let's say if we were looking at this area, it would make sense for potentially the market to go back into the highs, and all of that's kind of making sense from the technical perspective on the smaller timeframes, Ty, and the bigger timeframes. So we're bringing it all together and using the MACD and the support resistance and the peaks and troughs from a perspective of change of trend. So that's the importance of doing all of this. And of course, that's just a little example there on the euro.
Sure. Yeah, I'm just going to answer a question live because it's a very, very important one. Yeah, Stuart, no, if you're confident in the trade, it doesn't mean that you increase the risk ever. Sometimes it's when you're most confident that it actually fails you. Always practice the right risk management. Scalping doesn't give you a reason to up the risk, okay? So you've still got to be very, very vigilant, and you've probably got to be aware also that when you are applying a scalping strategy, you're probably going to be getting a lot more entries than you normally would if you were going for short-term, medium-term trades as well. So risk management is actually even more important in scalping strategies. So even if you're super, super confident and everything is lining up and the stars are all aligned, still only risk the same amount. There's always good opportunities, but there won't be any if you blow your account up, okay? So very, very important.
Yeah, there's always opportunities. Even when this volatility comes out of the market, the same concepts will apply. So with our patterns, Ty, we talked a little bit about patterns, and again, get that cheat sheet if you need it. We'll pop that straight in the room again, just so everyone can sign up and get it for free. So basically, look for key reversal patterns, double tops, double bottoms. What do they look like, Ty? Pretty much just like this. So I'll bring this on. So we've got double tops and we've got double bottoms, key patterns that are forming all the time in the market right now. We're also seeing a ton of symmetrical triangles, and we're seeing a bit of channels, and of course head and shoulders and inverse head and shoulders. So all of these kind of patterns are forming time and time again in the current market, but the key to them all is waiting for confirmation. So I'll just quickly blow this up for 1 second, bring it in. The key, let's say if we were trading this one over here, would be to wait for this to happen. We've got our top, our high, our intervening. We need to wait for it to break through. Don't predict that up here, oh yes, I think it's going to short down here. If that's your plan and you see like a hammer or something, a shooting star, sorry, up here, and that's your plan, that's fine. But in terms of where you're going to take the profit, you should take it at the intervening trough. Then when the confirmation happens and it gets through there, you could actually open a new system. That's actually fine. You can do that. It's a double scalp, but it would be safer for you that if you were selling it up here, you would take the profit at the intervening trough. If it broke through the intervening trough, like with a big, bearish candle here, then we could take the position and of course scalp it down. And that's where our moving average is going to come in. And the idea of a double top or a double bottom is that it's the end of a trend and start of a new trend. So when you recognize these patterns, what you might find is you might get into a scalp through here, follow it with your 20 and your 50 moving average on the 15-minute, and potentially you get in with a 20 pip stop loss and take 150 pips of profit. That's actually what is happening right now in the markets. They're that aggressive in moves. So very key to learn those patterns with any of your systems. And as you see us mention time and time again, it's about bringing it all together. You want at least 3 to 5 reasons to be in a trade, never 1. 3 to 5 reasons every time. So these are the patterns you look for. Obviously, wait for confirmation breaks. I've highlighted that because it's just so important. There's a quick link, of course, for the 100% free trading cheat sheet. You can get that. Example of a double bottom. And then, of course, economic news impacts. Now, if you're a scalper out there, get your economic calendars out this month and make sure you're aware of every single piece of news that is coming out, even if it is what they call yellow or orange news, not high impact red news. If you use certain, economic calendars out there, you'll know what I'm talking about. Basically, everything is going to pack into market perception. Okay, if we have, let's say, a terrible figure of, PMI come out of a certain country, that's of course incredibly important news, GDP, CPI, all those types of things. But even the small bits of news are going to potentially move currencies 20 to 50 pips and very quickly. So make sure you're aware, and if you're scalping, make sure you've got your stop losses at the correct levels behind the swings, and that you're not over risking your account. If you're risking 20% per trade, you are probably crazy, but but also that's way too much. So
Yeah, way.
yeah, try to
No,
risk 1 to 2%.
yeah, no, definitely. Look, you've got to be, you've got to be vigilant. Look, the market is moving very, very quickly, obviously, at this current time. But even when the market is behaving itself and traveling in a very, orderly fashion, you still got to keep your risk management correct. There's no need to be trading that much because there's enough trades out there to get you the results that you need if you spend enough time in front of the charts. Don't try and blast to the stratosphere on one trade, because it never works out well in the long run. You might get lucky a couple of times, but for the most part, you will pay in the end.
Oh, absolutely, Tyron. It's so essential to try to keep up to date with everything there. So all the news is going to be really, really high impact. Just be on top of it. Even if you're part-time, it is essential you check this every day. I'll stress it so many times because I really don't want people to lose, money in the markets. And I saw the GFC, I was there. I've seen high volatile times, and I know that the movements can be incredibly fierce. So Ty, let's move on to one of the final methods we're going to be talking about today, and that's the 1, 2, 3 method. I think it's really key because I think it's really helpful for beginners and intermediates in terms of analyzing key support resistance levels. And what we want to be looking for is areas of support or resistance that have touched 3 times. We want to recognize that these levels will be key areas when they break during points of high volatilities like we are seeing now. It doesn't matter what time frame this 1, 2, 3 is on. Obviously, the larger the time frame, the better and the more people that are going to see it. However, if you see this on a 5-minute or a 15-minute or a 20-minute or whatever time frame you're using, it will be an essential area. Now, of course, if these breaks happen in the direction of the 20 and 50 moving average cross and the overall trend, which would probably be pretty essential, or we're seeing a series of high peaks and high troughs coming into a level, and then of course it breaks through in that direction, it is better to see that. So concepts of role reversal are going to be key here. If we saw this in the market where we saw a point of resistance happen, and let's say we had 1 touch, and then the market came back up, touched again, 2 touches, comes down, comes up, 3 touches, and then breaks through, that is essentially the 1, 2, 3 method. It's broken in direction of trend. We're going to have our moving average probably somewhere around there, and it is touched 1, 2, 3 times. So the market's really thought about that level. It's found resistance, let's say at this level, and then when it's gotten through there, it's broken that resistance. This will create what they call like a trigger flow. So effectively what will happen is that all the little algorithms by the robots and everybody else out there, they're using MACD, this stochastic, whatever they're using, could be any kind of method, that will trigger them to enter positions. And contrary to a lot of people's belief, when a bank or a big position is placed, they actually place positions at certain areas. They don't just go all in like we might do. What they do is they place multiple entries. They might go first entry, second entry, third entry, fourth entry, fifth entry, and they'll continue to look for trigger points that are signaling them to get in. And remember, everyone's using different systems. So when you understand all these different systems, you might be looking there going, okay, I've used my 1, 2, 3, and then up here, you see your moving average cross, okay? And you go, wow, all the moving average cross guys are now in. And then you see your MACD go from negative to positive, okay? When that happens, and maybe that's up here, then you go, oh, cool, all my MACD guys are with me. So when you see all these things start to come into play and you've already been in the trade because you're using price action and using strong methods, you're going to be like, oh my goodness, this is awesome. Everybody's piling in. And by the time you're getting out up here, and that's when everyone's like, oh yeah, this is the best buy in the world. But you're already getting out because you've done it using something like a 1, 2, 3, support resistance, price action, and you just recognize all these guys are getting in up here. Then of course, eventually this trend will stop and pull back, and you hopefully through using the power of support and resistance will create key levels where you're going to be taking your profit.
And this happens on a lot of small time frames. So don't think that these are just examples we're pulling out of the air. Like you can see them happening all the time. The role reversals are very, very prominent, even in aggressive markets. In fact, we actually like to find them in the aggressive markets because they're the ones that really give us a boost, don't they, Thomas? Yeah, they are.
Absolutely, they're amazing. And And it's all about, you don't actually even necessarily have to trade the reversal component Ty. You can trade again, like that 1, 2, 3, breaks through. Well, there's probably the 3. This is more like a big one. And then breaks through, and you can just go buy and just get in and move in the direction of trend. This doesn't have to be a 4-hour chart. This can be a 5-minute, it can be a 15-minute. As we say, the stuff we teach in our course, Ty, it doesn't matter on the time frame. The most important thing is that you're recognizing the opportunities and recognizing the key levels, and price action gives you the best key to this. And it's often heavily underutilized by scalpers because they use just moving averages or they use just indicators. Indicators and moving averages are lagging price action. They lag it. They don't go in front, they lag the price action. So let's have a look at the 1, 2, 3 Ty and talk about even key levels right now, okay? So here we've got a few, I guess you would say, key levels that have happened on the S&P, and we've got one over here as well. So there's actually been some just recently. And we've got over here a little bit of a 1, 2, 3. Price has broken through. It's come back, retested, engulfed candle. This is definitely an opportunity to do the buy, okay, if we wanted to use the 1, 2, 3. Here we've got a key level of support. You know, we know it broke through very quickly there, but we can probably go up to a higher time frame. So we might go to, let's say, an hour, bring that down. This is going to be the key level that we're looking at, 15-minute. And effectively, if it gets through this key level of 26.34, if we go through the larger time frames, look how key this resistance is. Key resistance acting as role reversal at this stage. However, if it breaks to the short side, and of course, when we look at something like a daily, we see that shooting star, and that's a bearish shooting star, and then we go down to the 15-minute, all of a sudden we're looking at this zone and we're saying, wow, this is definitely a key zone for the market. Now, could the market go up? Absolutely it could. It could break through here and keep going up and keep bulling. But if it gets through this zone, Ty, I think that would be quite an explosive level from a technical standpoint. So very, very key level happening here on the S&P. US dollar CAD, this is more than a 1, 2, 3, but what you can see here, this 15-minute time frame, 1, 2, 3, 4, 5, 6, breaks through, explosive move, 20, again, gives us nice shooting star entrance. However, once this closes below, and I think there's no debating that this is a super close below, you can basically just short this and then just continuously follow it through. And if you followed it through, even with using maybe a 50 moving average, we go all the way down here, but you can see it double bottom based off this point. So the importance is look for the time, look for 1, 2, 3. Is more touches, the more explosive the move is going to be out of the break of the support or resistance. And this is just such an easy level to see. I mean, Ty, even blind, anyone could see this, yeah?
Yeah, that's a very easy one. And like I say, we could probably give you 5 or 6 examples where this has happened in the last 2 days. So this is only just one, good example. But like I say, if you miss the initial break, you're straight back to what we were talking about. Look at the touches to the 20. Every time it got there, down, you've got plenty of opportunities to join in. So even if you do miss the initial break, you've got a backup plan to get in on the touches of the 20 to basically join in. So. Yeah, you've got no worries there. It's actually working out really good. I've got quite a few requests actually, Thomas, for the live analysis webinar that we're doing in 20 minutes. It's in the chat room. So if anyone can't see it, just message me. But in the chat room on the bottom, you'll see the link to that. So you just click on that and register. And that'll get you through and you'll be able to join the next one. So we'll be talking more about the market specific action in that one because we'll be looking at the pairs that people are requesting to look at.
Yeah, so look, price action is going to be the key, I think, to anything that you're looking at with scalping at the moment, recognizing the key areas. Sometimes things are going to be explosive to the point where you're going to even miss getting through if you're waiting for confirmation. Don't worry, dust it off, move to the next one. Every currency pair, every commodity, there's so much opportunity out there. So don't be too concerned if you miss one or you go, oh man, I saw that go 200 pips and I wish I was in it and I'm you go trade something else by mistake. Don't do that. Just move on to the next one, dust it off. If you're having that emotion, probably just stop trading for the night would probably be the best thing to do. So You don't want to make any mistakes. You want to be in this for the long haul. So of course, optimizing our entry is really important, Ty. We want to use during this point in time, don't break even your trades during a fixed pip amount, use percentages. When you put a trade in, work out where your take profit is going to be. Generally, you're going to do that with price action, I believe, with support resistance. I believe that's going to be the best for you. Let's say you think you're going to take 50 pips or 30 pips in a scalp. When your trade gets to 65% of what you expect, that might be a really great market adaptive break-even amount. Don't just say, because it's every single time you're going to have a different take profit amount. If you always have 50 pip take profit and 20 pip stop loss, that's not very market adaptive and it won't work over the long term. Unfortunately, that kind of system, and look, hey, I started there as well, is not a good one. You want it to be market adaptive. No fixed pips, use percentages with everything you do. If you're building out a bit of a system, Ty, things like creating a trade system based on multiple entry criteria, never one reason. We want to use moving averages. In this case, we've got the 20 key moving average on all time frames, amazing, and stocks, amazing, and commodity, amazing, and everything. And that makes sense because when you think about a month, how many trade days do we have in a month? About 20. So it makes a lot of sense. Support resistance, including role reversal, very, very important. So you might give that 25 points. You might use the MACD indicator similar to how we talked about tonight. And of course, trending market, very important. You have 3 of these reasons, maybe you can place a trade. But if you have 2 of these reasons, it just may not be good enough. So Ty, what do you think about having a trade system? It's just so important, isn't it?
Oh, it's even in, like I said, even in scalping systems, you still need to have that system in place where it can be as quick as a very quick reference check. I mean, you only need 3 or 4 reasons to get in, and most of the time you can identify them in a matter of seconds, because when you know what you're looking for, it does present it. And this is probably a really good reason why, jump onto that cheat sheet. It's free, download it, print it, and put it on your computer, above your computer screen or on your desk somewhere, because sometimes you find yourself forgetting what the patterns can be. But when you study them and you know what you're looking for, they become very, very apparent on the chart. And once you've identified a pattern, that's when you can look at the moving averages, price action, MACD, even to a lesser extent, stochastic or Bollinger Bands, depending on how many indicators you're going to put on. But you'll get your answers very, very quickly. So it doesn't have to be a big and exaggerated, because you can't. At the end of the day, when you're scalping, you haven't got a lot of time to make decisions, or you could miss the move. But when you do understand what you're looking for, it's a very, very quick process.
Okay, Ty, I just thought I'd mention this. Look, we're going to get to some Q&A before we finish up, and we'll just reiterate the things that we talked about today and what you should take out of today's webinar. But of course, we're doing a special Pepperstone promotion. We're going to call it the lockdown special or the self-isolation special. We know there's so many people interested in trading, and look, we've been around a long time, and we really do like having a great trading community and people joining. So look, we've basically just slashed our foundations course. It's a great way of getting all the information that you need, especially price action, best indicators to use, all that type of stuff. And of course, our private Telegram group where the guys from the course all share their concepts. And of course, everything else, Ty. But we're doing it for $50 a month, and there's just no obligation at the moment. You just do it. If you don't like it and you want to cancel it or anything like that, you can do so. But we're very comfortable with what we've done, and we really like, helping people to achieve, I guess, their goals. And I think our feedback speaks for itself, but also, Ty, we've been around a long time, and unfortunately, it is an industry with, a lot of downsides to some degree, but trading is a lifelong skill. So we think you're going to get something out of it. And if you feel you didn't, you can just let us know. But I thought I'd mention that, and I'll pop that in the room. Create a business plan.
It's a great skill.
Yeah. We don't usually talk too much about that, but it is important. So creating a business plan is super important. As we mentioned tonight, things to get out of this. Confirmation is key. Absolutely, it is key. Definitely look at the 1, 2, 3 method. Look for support resistances. It's super basic, but when you bring it in with your other ideas and concepts, it may help you. So look for support resistances that have multiple touches in the direction of trend. When they break, look how explosive it is. Get confidence in that. Things like the moving averages, use the 20 moving average, bring that onto your charts. The MACD, that's just a simple concept, but MACD has so many different ways of applying it that application will apply when you use key price action over the top. And of course, patterns, Ty. I mean, just the patterns are just so essential. But they work for a reason because they're self-fulfilling prophecies. They give you stop losses and they give you take profits.
They do. It's very, very important. And like I said, as much as it seems like it's a lot to actually take in, when it becomes automatic, I think you'd be amazed at how fast you can do it. I know in the next couple of weeks, I think what we might do is actually do a webinar just on putting a trade plan in action, and we'll put a couple of live ones in to just to show you how quickly you can actually put in a plan and you can follow it. And when you do get that right, trading becomes a lot easier to do than just trying to pick and choose the direction that you're going to with no set idea. It makes a very, very big difference.
Absolutely, Ty. So I've got some questions here that I think I'll answer. I'll just leave this sound risk management strategies on the board here. Yeah, it definitely will be emailed to everybody and recorded on the Pepperstone YouTube channel. Okay. It's quite a few questions about multiple screens. There's initial targets. Yeah, so 65% would be of your initial target or your target, absolutely. You can leave some on as well. So let's say we were looking at a particular trade and we were say, I don't know, let's say we're in this odd, all right, for whatever reason, we're on the 15-minute chart here. If we were on this Australian dollar and we saw it pushing higher, and let's say our take profit was here, we might say, okay, take profit here. We've already broken even our trade. Let's take off maybe 2/3 of our order. And because we know it's volatile, if it gets through here, it's in the direction of trend. Very important, it must be in the direction of the bigger trend. It's in the direction of trend because if we check 4 hour, you're going to notice that we're in an uptrend here. We're about to make a new high. It makes a lot of sense for you to hold that position and then look for the daily. And you can get some scalps on and potentially you could be looking here and saying, okay, if it breaks through here, I'm interested in taking it up to here. And then when it gets to this level, you could be up 300-400 pips with maybe 1/3 of your order. And it pays dividends to do that at this point in time, I think, to leave some on. Make sure you get the Pepperstone advanced trading tools or these tools here and use something like the mini terminal. And what you can do is you can use this in your scalping to set your take profits and stop losses as well. So you'll see this little yellow kind of thing come here and it loads it up and you can put all your different types of orders. Amazing. Fixed risk,
you can't go wrong with that.
equity.
It is such a good tool. Yeah, just contact your Pepperstone client services officer for that one. It's free for everybody who's got a live account, I think, with $500 or more. It's one of the most valuable tools or set of tools that you can use because it's just so easy to work with the lot sizes, where you put your stop loss and take profits, compared to your risk. It's just a fantastic tool. We use it every day. We never do our own calculations because it's it's very, very accurate for what it is. So yeah, please send it through to Pepperstone if you haven't got it, and they'll give you the link. It is a really, really handy tool.
Yeah, great little tool and absolutely worthwhile using it because you don't want to make mistakes. If you're trading, let's say currency, you might always use maybe 0.5, 0.2, 1 lot, whatever it is. But remember, when you're moving to commodities, commodity sizing is different. So one thing I get asked a lot is go into the symbols. You can see all the symbols, so that's right click on symbols. You can see the size of a contract. So a contract in this case is $100,000 effectively, one contract would be. You can see your swaps per day, swap long, swap shorts. All this information's in here in MetaTrader 5. It's in CTrader as well, but you can see all of that. And another little top tip, right click, show all, left click. That will give you access to everything that Pepperstone offers in the platform, okay? So the Market Watch, right click, left click, show all. Amazing, gives you access to everything that's in here. Bring on your VIX if you want to, see where the VIX is trading, still very high. You can see how high it was. Higher this is, the crazier, I guess, the scalping opportunities are. So yeah, no problems. All right, well, look, Ty, I think you've done an amazing job answering so many of these questions. What size account do you recommend to cover the expense and make a little profit? Though that's not an easy query to answer. So it depends what kind of expense you mean. If you're talking about just the brokerage, it's all pretty much scaled. So the great thing about Forex is it's not like stock where you buy a stock and that stock might cost you $25 every time you want to buy or sell, which means you have to have a bigger trading account. You can trade like a micro lot or a mini lot, so 0.01 might only cost you a couple of cents to get into it. So very, very cool for that stuff. What is the VIX, the volatility index? We've covered this in a few webinars. I'd suggest you jump on Pepperstone's YouTube for that one.
Check it. Yeah, check the Pepperstone YouTube channel. We did it about 4 or 5 weeks ago now. There's a whole webinar just on it. It's a very, very useful video to get your head around what the VIX does and how to use it, especially in the scalping environment.
Charles asked, what's the fee after the 12 months? Is it only 12 months? Yeah, it is. That'll cover you for everything. You'll stay a part of the group, stay part of everything. We call it the lockdown special for a reason, and that is that it's something that we know there's demand for. We want people to get the best education possible.
Yeah, and it's a big course too. It's a lockdown special because it's going to take you about 20 to 25 hours to finish. It's a big course. So yeah, for what you're getting, you don't think you'll be done and dusted in half an hour. It's a big course. So yeah, you want to be in lockdown to finish it in a timely manner.
All right, well, we do need to start another one, Ty. I'll answer this last question. Why is the XTI chart on Pepperstone out by a few dollars? It'll be slightly different to some of the other futures contracts. Some futures contracts take into advance like a bought forward contract. I'm not quite sure how that's created, but effectively it's around barrel cost and having barrels sitting there, and also as they expire and reset. So some futures contracts or some contracts in general will expire and a new one will start and they'll have a different price. Okay, so very important to understand that. All right, well, look, thank you very much, everybody. We hope you enjoyed the webinar. We certainly did, and hopefully you bought something out of this one today, Ty, in terms of, whatever you've learned, it's always a lesson, and we always learn every day, so that's amazing.
Yeah. Now, don't forget, guys, we've also got Pepperstone are putting on a webinar every week for the next few weeks and for the foreseeable future. So please set your alerts to make sure you register for next week's webinar. We'll be doing another teaching webinar on probably another different method and adapting it to the live markets as well. So this is going to be ongoing every Wednesday night for at least a month of April. So keep registering, and if you do happen to miss it live, make sure you jump on the YouTube channel the next day to basically watch the replay, so you can get the basically you can see what you've missed, or you can review any of the stuff that we've talked about.
All right, thank you very much, everybody. We'll see you next week, or we'll see you in 10 minutes. And yeah, we look forward to it, and we hope everyone has a really good week trading. We really do. Thanks, everybody. Bye.
Thanks, everyone. Good night.